Good evening, everyone. If I can just get your attention, I just want to thank everyone for coming out tonight. My name is Kelvin Dickerson. I'm the founder of TokenizeLA, and I know there are a lot of events going on tonight, so I just appreciate just your effort in coming out and supporting us. This is our first kickoff event. And just to tell you a little bit about TokenizeLA, we are a growing community of security token experts and enthusiasts here in LA that just want to connect. We feel like it's a exploding industry. There's a lot of opportunity here in LA, and there's also a lot of opportunity to tokenize. So there's a lot of wonderful, talented people here. So we said, hey, why not bring us together on a monthly basis just to kind of connect and support one another. Does that sound all right? Is that cool with everyone? So again, I appreciate you guys coming out. Just a little bit about myself. Yeah, I'm from my background is more in business development. I'm from the marketing and advertising space in New York. I worked for a lot of the big ad agencies, helping them bring in multi-million-dollar deals. But a few years ago, I literally got married to Hollywood. My wife is a TV and film actress, and she was like, honey, we got to move to Hollywood. And I'm like, that's not really what I want to do, but I love you. So, I moved out here, and we started a production company. And the beginning of last year, the beginning of this year, actually, I'm a big-time investor in real estate. I have a lot of real estate properties and stocks or whatever. But I heard about blockchain. I started investing in crypto. I had no idea what it was, and it started going up. And I'm like, what is this thing? So I went to Draper University's blockchain executive program and a lot of different programs, and really got into it. But someone gave me some really good advice. I'm like, this is it. This is what I want to do. This is what I want to be a part of. But someone gave me some really good advice. They said, hey, blockchain is so big, you got to pick an area, right? Or you're just drowned, right? And so security tokens really spoke to me. Once upon a time, I had 12 real estate investment properties, and I was having some cash flow problem. And I wish I could have got some liquidity out of that, right? So I was like, man, if security tokens were around then, I probably wouldn't have gotten financial trouble with my property. So that's a little bit about me. Just some quick ground rules tonight. We just ask everyone just to put your phones on vibrate if you can, and just while we're having a discussion, please kind of keep chattering to a minimum. If you want to go grab a beer or something to drink, that's fine. But we just ask you to be courteous to the panelists up here. I want to quickly, before we start, I want to do a little survey. That's always cool to see who's in the room. So let me ask you, just by a show of hands, who's new to the space, the STO space? I will call you like novices. You're curious, or okay, yeah. Wow, okay, all right. So we have about 20% of the room. Okay, well, welcome. So secondly, how about who's highly interested in the space and kind of follows it a little bit, the articles and what's going on? By a show of hands. I call you guys the STO enthusiasts. Okay, so maybe about a third of the room. And I would call this last group the STO practitioners. So who's working in the STO space or has a fund, investor? Okay, wow, okay. That's like half the room. All right. So you guys rock. So that's cool. So the next thing I want to do is let's just hop right in, because we're trying to cover a lot tonight. But let me put some caveats out there. I mean, you guys know security tokens is a beast, right? It's like drinking from a water hose. This is a high-level discussion. We're not going to be able to cover everything tonight. We're not going to be able to answer everything tonight. And we have lawyers and what have you in the room, but we can only speak from an educational standpoint. So I just want to set some caveats. If we'll at the end, we'll try to get to questions, but if we run out of time, please email me or what have you, and we'll try to get your questions answered. But again, I mean, we're going to try to, hopefully we can cover and dig in to some good areas. Hey, we encourage everyone to post on social media. So the tags we're using tonight are TokenizeLA, Security Tokens, and Kelvin Dickerson. So there you go. Right, plug. So if feel free to post or what have you. And if you have, we definitely want to just continue to add value to you guys. So if you have any suggestions or what type of support you need or what would be helpful, please shoot me an email or tweet, or I'm on Telegram, let me know. And again, we're just trying to build a lot of resources for you guys. So with that, I mean, our panelists are already up here, so I'll just kind of, why don't we do this just for the sake of time? I'm going to give you the mic, and why don't you introduce yourselves, and we'll start from there.
Hi, I'm Luke Kerner. I am a co-founder of CryptoOracle. We're a community-first VC accelerator and incubator based in New York, but I'm here in LA. This is an awesome ecosystem, and I spend quite a lot of time here, and I'm excited to be here. I think security tokens are a thing, and I'm excited to be talking about them.
Hi, yeah, it's good you think they're a thing. Otherwise, we're all in the wrong place. So my name is Paul Monsen, and I'm a co-founder of a group called Digital Asset Advisors. We work with a few select clients basically on security tokens. Most relevant to this room, and actually one of the first times I was in this room was pitching a security token back in January, February of this year called Slice, which will be the first one to do a different term, but STO, they're going to be doing a TAO, tokenized asset offering of real estate. So that's where my expertise comes in.
My name is Morvareed Salehpour. I am a lawyer who works with blockchain entrepreneurs and businesses to help them resolve their legal issues regarding contracts or legal compliance issues, as well as litigation when disputes arise.
Yeah, hi, my name is Benjamin Tsai. I'm a co-founder and CFO of the LA Blockchain Lab, and I also work at Wavemaker Genesis. My background is finance. I did about 15 years of finance out in Asia in various different capacities. So thank you.
So let's give our panelists just a round of applause. And again, all of you guys, thank you for coming out tonight. I know like your schedules are probably crazy, so I just appreciate you guys paying it forward. So hey, let's hop right in tonight. So my first question is, let's talk about like STOs and what is an STO, and how did we get from ICOs to STOs?
Look, it turns out there are these things called regulators.
Yeah.
And I don't actually really like to spend a lot of my time on regulators because it's not so interesting. But I basically think that what they're going to do is regulate because it's in their job title. So that's what they're going to do. And they have two choices. They can roll out the red carpet, or they can roll out the red tape. And they roll out the red tape at their own peril, because this is happening. And whether the U.S. allows it to happen, when it allows it to happen, how it doesn't really matter. The people who say, "Oh, I'm waiting for this to happen," no, it's happening every single day. It's happening around the world. Google and Facebook are not allowed in China. Not allowed in China. China says, hey, fuck you, Facebook, Google. Not here. Go fuck yourselves. And turns out they're still a thing. So you do not need, like the United States, you don't need China to be a big global thing. This is happening regardless of what the regulators do. And, hopefully they'll do the right thing sooner rather than later.
Yeah, that's great. So, it's interesting. It's interesting now. I'm seeing all these different terms now, like digital assets, digital securities. Yeah, it's a lot of different terms, and maybe someone can explain that to me, right? I don't know. We're trying to move away from the word ICO, but yeah, it would be great if someone can comment on that.
Well, I think the first point is that an ICO and STO are the same thing.
Yeah, right.
It's just people
Right.
trying to recharacterize it. I mean,
Yeah.
the laws and regulations haven't
Right,
changed.
right.
It's still people using the same exemptions, but now realizing that, that you can't really say it's a utility token anymore, which was never really a strong argument anyway, especially after the SEC started coming out with guidance.
Right.
So it's really the same thing.
Right.
And I don't see blockchain companies really going for a full-on IPO status because it just doesn't make sense when
Right.
you're a startup to incur that kind of cost and due diligence obligations. So
Right.
I think.
But there were lots of lawyers who said, hey, go to town, right? There really were. Marco Santori, no offense, right, was leading the charge at a very reputable law firm. Hey, go to town, be a utility token, and,
He did say that. I think a lot of people disagreed with him. So, get advice from who you kind of trust. And I think at this date, even if you could have claimed, some kind of gray or innocence back in, the early days of 2017, that's
Right.
not the case now.
Right.
I still get people who call and want to do utility tokens, and I just tell them I can't work with them because that's not
Right.
that's not the world right now.
Right. So are we operating from the standpoint of, I guess, all tokens are security tokens? There's no such thing as a utility token now. Is that fair to say?
I think so because
That's
of
where we
well,
are.
the way that it's set up right now, unless you want to be the person who's going to go fight the SEC on this,
Right.
which is going to cost you a bunch of money, that realistically there is still a place where there is some kind of utility token. Even the SEC has said that Ether was a security token that then became a utility at a later point. But because most of the situations, it is the reason you are doing this STO, ICO, whatever you want to call it, it's fundraising. So it is a security. And regardless, if you want to really find a use case where it is not any kind of raise of money and it's utility, you're still going to have to deal with a SEC enforcement action and them coming after you and then incurring legal costs at that point. So it is maybe the best decision to try to comply with the regulations as best you can. The other thing to kind of point out is that you may not even need to do an STO, ICO because a traditional fundraising method may be better for what you're trying to do.
Yeah, so I'm like 90% of the way towards Morvareed and like 10% of the way towards Lou, but I used to be 100% security tokens. So I was preaching security tokens in early 2017 because I didn't believe there was such a thing as utility tokens. I do think, and even the SEC has said that there could be a potential case.
Right.
I just haven't seen it.
Yeah.
So backing up though, what a utility token is basically think of like rewards points when you're traveling.
That's good. Right.
An STO, think of that as a digital representation of something you own in a perfected manner, right? So that's like what it's basic. Going back to your other question, digital assets. Digital assets are something that we've had for a very long time, since basically 1990 when the stock exchange decided we could have virtual shares that we could trade on those things. There's a lot of buzzwords in this space. If you guys like buzzwords, this is the space for you. Go for buzzwords, go blockchain. So, yeah.
I love it. So, so for the STO novices in the room, what are the advantages and disadvantages of a security token?
I was just handed the mic. I guess I
Yeah.
can talk a little bit about that. Yeah. So I come from the traditional finance space, and I see a lot of advantages in the security token space and really tokenizing various different things. such as funds and equity and so forth in there. And there are a lot of benefits to it. One of the ones that I've been discussing just today with another client is it is actually very easy to send out dividends and payments and so
Right.
forth. Right now in the stock dividend world, you got this whole ex-dividend thing. You record it. 3 days later, you get it, you don't get it. Some people got it, some people don't get it, and therefore the stock price reflects that, doesn't reflect that. That comes from the fact that it takes 3 days to count all the people up, and it's like that is not an issue here with security tokens. The other thing is the cost associated with it, and sorry to be long-winded on this specific
That's
point,
fine.
but back when I was doing mutual funds on the buy side, we went from quarterly dividends for a mutual fund to monthly dividends, and that was, staffing up significantly, trying to keep track of all the payments, everybody's bank account information, and paying that out. I was speaking with some token platform guys, and I asked them, what's the cost of sending a dividend out to the clients? They're like, I don't know. We've got a client that's like, they're paying it daily. So is that fast enough for you? Do we need to do it any faster? I'm like, no, that's great. So basically, there's no cost. I mean, they just send it out to send it out to the wallets.
Right, right. No, that's great. So let's talk about the next thing I want to talk about, which I failed to mention, moving to Hollywood. My focus is really on tokenizing a movie fund. So we're somewhere, I guess we're 30% in the process of doing that. But I want to ask you guys, like, maybe we can put a crystal ball in the middle of the room. Like, what does the future look like for security tokens? I mean, can everything be tokenized? Yeah, I mean, what is possible?
Let me hog the mic for just a little bit more,
Yeah,
and
sure.
I'll share just my own opinion on this. I really think everything can be tokenized, and maybe I'm being a little bit idealistic, but I feel like up to now we've used equity, FX, rates, bonds, and mutual funds and REITs, and we've used a lot of different wrappers around things just really to deliver cash flow to people, and it pays out in different ways. It carries different rights. I think all of that can be consolidated into tokens with some of these differing functions. So I really do believe in that.
Yeah, I think that we can tokenize a lot of things as well. I think it's going to take some more work, though, because some of it's more difficult, like with real estate. I think there's issues there that still need to be developed, and how are you going to actually tokenize this in a legally compliant and effective manner? Same with the film. I think there's a lot of issues there because a lot of people are raising it want to raise it for particular films or particular songs in the entertainment industry, and that could even be a situation where you're doing mini ICO STOs for each product, and that becomes a lot on the compliance side.
Yeah, right.
Yeah, I'll jump in here. So I agree that everything should be tokenized. I think for a little bit different of a reason, and it's because what tokenization allows for is for you to interact with the things that you own in a more efficient manner, or at least in theory, right? I'm a millennial, and millennials really want to interact with the things that we own digitally. Like, we don't want to interact with it any other way. So the reason I think that it should be there is because millennials are driving this, and Gen Z and Gen Y, they're worse. They really want everything digital. I mean, my niece was 3 years old and could do an iPad better than me, and I work in technology. So she's going to want things digital, and I think that's where it's going to have to go.
Yeah, that's good. Paul, I know you've have a lot of experience kind of in security and security tokenization. Like, let me ask you, like, should everybody tokenize, or who should? I always want to know who should and who shouldn't tokenize, and what does the process really look like, right? I read a lot of articles and all, but I can never get to the bottom of what the process really looks like, I guess, from A to Z. I'm putting you on the spot.
Yeah, I think that question comes to me is because I've been a little bit more on the operator space with Slice, and now with 2 other projects that I'm intimately involved with. Who should tokenize? Hopefully, at some point, everybody. At this point, it should be the people that are prepared to, like these guys in a different world, never sleep, just work like crazy, and have to solve a crap ton of problems. Like, the problems that Slice has been solving aren't just our business problems. And Lou and I were talking about this before. We're solving simultaneously the problems of the exchanges and the custody groups, and lawyers are helping us solve all of those problems. And it's a little different than, I think, traditional startup world, where you solve your business problem, and nothing else, right? This one, we're solving like millions of problems. So if you don't have the appetite to like solve a whole bunch of problems, it's not for you. It can suck, to be honest. But it's super rewarding, but it could suck.
So, I mean, I know there are a lot of issuance platforms out there, such as, a Polymath, Harbor, Securities. I mean, can I just go on the platform and tokenize? Can I do it myself, or do I need a lawyer? What's up?
You need Wavemaker, I think, right, behind you?
Would the lawyer like to comment?
Well, I think you need a whole team of people.
Yeah.
You need a lawyer, you need the operations people,
Right.
you need a finance person. You really need a whole team to be able to
Okay.
operate it effectively.
So it's not like the issuance platforms make it where I can just push a button and everything's
I guess it
tokenized?
depends on what platform you're working with
Yeah.
and what they are offering to you, but there are some that try to be more full service, and then
Yeah.
you could even try to do your own.
Okay.
I've met people who are trying to build their own.
Yeah.
So.
Yeah, I mean, I think, look, that's the world we're trying to get to. I'm pretty sure we're going to get there eventually. I think Republic is, as far ahead as anybody. So I think you can actually go there, and you actually don't need a lawyer. You just, need to put who you are and put the documents up there and
Okay.
rock and roll.
Okay, nice. And I've heard different figures on how much does it cost to security tokenize, right? I mean, I've heard all the way up to $500,000, right? So I don't know. I would love to get your viewpoint. How much does it actually cost to security tokenize?
Do you mean $500,000 a month?
No, I don't know.
No,
I mean, just,
it can be
in
super
totality,
expensive.
marketing and everything.
If you don't have the appetite to spend $1 million to go after this, I don't think you're going to be effective.
okay.
I don't
Wow.
know, Lou. You know the whole ICO process too.
So now you do this, then you do that, then you do this, then you do that, and then eventually you're going to run out of money. And that's where we are right now. Seriously, here in the U.S., it is very, it is, if you're not a security token, you're going to struggle. And outside of the U.S., there's actually still a lot of interest. My guess is eventually we'll get there, but we're not there now.
And that's why I always say, like I was saying before, that really make a decision. Is this make sense for my business model? Because the cost is really high, the cost and effort. So for a lot of startups that are trying to explore the space, it makes more sense to just go the VC route, traditional fundraising route.
Yeah, I think how much it costs actually really depends on what you want to do, and I don't want to get too granular on a panel because I think it just takes forever. But for example, typically marketing cost of one of these offerings is about 10% of what you want to raise, so you have to have kind of an appetite for that. And then you've got the actual issuance, you've got the lawyers, you've got, every layer costs a certain bit of money, and the less familiar you are with the process, the more consultants you need to help you with those steps, and when you add all of that up, that does add up to quite a lot. On the other hand, I think if you know what you're doing, in theory, I think Polymath, if you log on the network, click some buttons, they will issue a token for 22,000. But is that compliant? Does that do what you want to do? There's no information there. You have to figure that out. So if you're talking about what is the cheapest thing you could do in issuance, let's call it 22,000 on Polymath. But I'm not saying they're bad. They're offering one slice of the total thing that you need to do. And who's going to sell that? What's the process? What is the governance around that? Token economics and so forth. All that is separate, separately charged by other firms. I don't think Polymath offers that. So.
I'm a startup. I'll go for the 22,000 and take my chances.
You'll do everything else yourself? Yeah, great.
So, how long is the process from, I guess, soup to nuts?
I think it depends on what you're doing.
Okay.
It depends on what you're doing. If you're doing a limited exemption, that's a lot faster than if you're trying to do a Reg A plus or IPO version,
Right.
So it just depends.
I guess, yeah, I'm trying to squeeze you guys a little bit. I guess, just projections. I mean, well, ICOs. I mean, well, ICOs sometimes get a raise overnight, right? Is it 3 months, 6 months, or I'm sure it's a longer process in ICO.
Yeah, I think when you say you hear ICOs raise money overnight, that's actually just the marketing and offering
sure.
portion of it. There's
Right.
kind of the whole run up to that. There's the structuring, there's the paperwork and all the lawyers reviewing. Okay, some ICOs have less lawyers than others, so the process changes from that perspective. I think the other thing is that if you set up your business and you've ICO once, and to issue more of the same tokens would be very quick. So there is a very wide spectrum. It's very hard to pin down a time frame.
Got it. So let's talk about what we hear almost daily: regulations. Yeah, that's a big word. So I'm so confused about regulations, right? I mean, how many? It feels like the alphabet, right? There's Reg D, Reg A+, Reg S, Reg CF. Yeah, there's just a ton of regulations. Morvareed, I'm gonna let you take this one. Can you just give us maybe a top line on the different regulations and the differences?
Sure. I mean, it's all securities law, and those are exemptions that you're talking about. So you can do the IPO, which is the fully registered version. You can do the Reg D, which is an exemption that's for the U.S., where you have to sell to accredited investors. It's an unlimited raise, and there's some other kind of limitations on that. There's a Reg S, which is to foreign investors, and you can do both a D and S at the same time.
Right.
And then you have the Reg A+, which is the kind of mini IPO, and you can raise up to about 50 million. And then you have the CF, which is the crowdfunding, and you can raise a little bit over $1 million. So those are the different exemptions, and you can find what works for your business, how much you're trying to raise, how much you need to really get you to that next stage of growing. So that's on that side. I don't know what else. I mean, what else do you want to know on the regulation side? There's a lot developing, obviously.
Yeah. No, I know it's a lot. I mean, are you finding STO raises do one regulation over another, or it's kind of a mixed bag?
I think D and the D combination DNS is the most common that I've seen so far. I know there's some that have done the A+, but no one has actually had that approved by the SEC yet.
Yeah, some insight into Reg A+. This is basically so common folk, as a lot of people say, terribly, can invest, or unaccredited investors, right? Reg A+ came about in 2012, 13, and first got launched in 2014, so it allows for anybody to participate. Basically, the SEC has a checkbox, let's just say they've got 10 boxes they need to check. Just by the introduction of blockchain or crypto, though, it removes like 5 of those check boxes. So the SEC hasn't pushed one through. They've got a backlog in terms of crypto blockchain projects that I know, and maybe somebody's got some new information. Looks like Ben may have some new information. So it says that, yeah, they used to say it could take 6 months in traditional markets. There's been blockchain companies that have filed Reg A+ now. They're 13 months out, and they still haven't got through the second round of comments. So,
yeah, I actually don't know that many projects that are doing the A+. It does sound like it's quite difficult. I've seen a number of projects do the Reg CF, which is the crowdfunding raise, and it's capped at $1.07 million. So it's not particularly useful for some of the larger projects people are looking at. And if you look at 1.07 million minus the cost of doing that raise, it's actually not a lot of money for startups versus the amount of time and effort it takes to do that. So if you eliminate A+ and CF, you're really left with D and S. So D being onshore U.S. accredited investors, and S overseas.
That's really helpful. So I know we don't really hear this talk about this a lot, but Morvareed, I would love for you to kind of maybe discuss some of the litigation that's going on in the space and the recent rulings in the space.
Sure. So there's a lot of case law being set now, and some of them are, basically both on the criminal side and the civil side in the class actions that are being filed against people who have done ICOs. The judges are ruling that it's basically securities, that this is securities laws applies, these are investment contracts, and there is no utility token by these. So for example, there was a case in New York, which was recently ruling came out, where the judge ruled that the ICOs may be subject to securities laws. And in that situation, the person who was liable for it had basically tied diamonds and real estate to these tokens. And the judge said, that's securities law, you do not get to dismiss this case. Another one that came out recently that was really interesting was the CenterTech civil case. So there's a class action filed against CenterTech in addition to the criminal complaint, and the judge just froze their ICO wallet because he said that it was securities law violations, and so that $30 million is now frozen. I think the most interesting one recently has been the case against Tezos, because the judge has basically ruled they had one of the entities that was sued on their side was set up in Switzerland. So they were trying to find a loophole to get out of the application of U.S. securities laws. And the court basically said no, because you have to look at all the circumstances surrounding the sale and not just how you've set up your contract or the fact that you have put yourself in another jurisdiction. So they looked at all the factors, and one of the factors that the court looked at was the fact that most of the nodes on which the transaction occurred were in the U.S. So that was a factor to establish U.S. jurisdiction. And it goes back to the traditional kind of Commerce Clause jurisdictional element in the law that if you're taking advantage of commerce somewhere, then you're going to be liable jurisdictionally in that area.
Wow, that's fascinating because you never hear about that. Yeah, I mean, I've never, like in all the articles I read, I never hear about litigations and
I know, and that's
so,
where the case law, that's where the precedent's being set.
Right.
Make good friends with Morvareed if you've done an ICO, because it's going to happen a lot.
Yeah, I was gonna. Yeah, well, yeah.
You know, or you can be decentralized, and who the hell is the government going to come after?
Yeah, there you go. Yeah, so I guess the takeaways, Morvareed, is, yeah, I guess you have to have a good lawyer, and you have to like really dot all your I's and cross all your T's.
Yeah, I think with some of these issues, you could definitely put some forethought into this. So if they had talked to the lawyers at the beginning and structured the transaction appropriately, they could have avoided some of these issues. So there was issues with how they actually structured their contracts, where the court was saying the way you structured it is not appropriate for establishing the limitation of liability you're trying to establish. So that's important to get some of that analysis and forethought put in on the front end to just limit your liability and limit your jurisdictional.
Yeah, as far as regulations, man, it's real out in them streets, right? You definitely gotta kind of, yeah, you definitely gotta be on it. So, what are some of the common legal mistakes you guys have seen startups make when it comes to going through the security tokenization process?
Yeah, too much. All right.
Well, I think the biggest issue is they don't think they need a lawyer. They think it's a utility token. They don't want to spend any money to raise a whole bunch of money. Those are all some of the big issues. You need to find appropriate consultants, whether legal, business, finance, and work with them to do this in the most efficient and effective manner.
Yeah, got it.
Yeah, just a quick one. I feel like a lot of firms I speak to, they don't put as much emphasis on the whole AML KYC side of things as in vetting the clients that are coming into the deal. They're really focused on getting as many people to invest as possible, which conceptually I get. But you know, that process actually, the regulators care a lot about, and they actually will focus on that area as part of the raise. So certainly that area is something that's worth spending the time to focus on and make sure that it's done correctly.
I agree. I've talked to FINRA lawyers, and they've said that's the area that they're really going to come after more so than even the SEC, because that's where you may have money going to terrorists and people you don't want it to be going to.
So this question is directed at you, Paul. What are some or maybe if you can talk about, you have a lot of experience with Slice and what have you, some of the successful STO raises out there, or or STO raises that are in the process?
Yeah, so I guess as everybody says, success is relative, right? Successful in terms of money raised, that's one different thing. I think one of the more successful ones I saw was Kodak. They did a Reg D, Reg S. Everybody knows Kodak. They take pictures, right? It's a Kodak moment.
Right.
Really interesting company just called up the CEO of Kodak and said, hey, can we do a blockchain version of this? Just off of the name, they raised like $30 million. This is like a quick one. But again, success is relative. We're just starting to see these security tokens, and how many of them will be successful 2 years down the line or even 6 months down the line is, I mean, there hasn't been any that's been around for more than a year, save Blockchain Capital and Science Inc. So, yeah.
And I think it's interesting in terms of just people even considering these fully registered STOs. Traditionally, these have been companies that have been around for a while, and now they're doing their public offering, and there's a lot of evidence of their finances, there's due diligence, they may be around for 15, 20 years before doing something like this, and now these are startups who are trying to raise money. And as we know, the evidence shows 90% of startups fail, so a lot of these situations may be situations where the people investing are not getting anything back.
You know, these issues that everybody's raising are all, you know, real issues that need to be addressed. But, you know, I'm pretty sure they're going to be addressed. It's what's unbelievable is, you know, the smartest people in the world are leaving their jobs at, you know, the best companies in the world to come and help solve these problems. And, you know, I think is amazing for me as I think the real opportunity, look, we can now, you know, what's coming, not today, not tomorrow, but sometime soon, right? There are going to be the rails that people can raise money around the world instantaneously that will have some level of liquidity associated with it. That's amazing. But what I think is the most amazing thing is now with this new technology, right, is what is a security? Right? That's, you know, we're just at the very beginning. The analogy I use is it's like the very first thing that NBC, who was the very first broadcaster in the United States, the very first thing they put on television was a guy sitting at a table with a microphone going, hey, now we're doing radio on television, right? Because that's all they knew. Right. They didn't know anything but that, and that's all we know about a security is what, you know. So our minds are right now kind of a little caged in, but very quickly I think what a security is and how it's sliced and diced and we're able to create value from that. I think that's what's incredibly exciting.
That's right. So, yeah, it's really insightful what you guys are saying. Okay, so how hard is it to do a raise? I mean, you know about raising money. Yeah, I mean, I got my lawyer, I got my team together. Yeah, how hard is it to do? And what's the success rate of raises out there? I mean, do I have like a 25% chance, 100% chance? Yeah. You're thinking, you're mulling
yeah, look,
it over?
I think if you're a founder and you're thinking about percentages, then you fucking stay at your job, right?
Well, let's be honest, there aren't any yet. The reason why there's no answer to that question is there aren't any yet. There's some that sort of after the fact are being considered STOs. Like the Kodak one was not an STO when it was done. And it wouldn't fit the definition of an STO today. If they wanted you to do what they did, there's no way you would allow them to do it the way they did. Right. So part of the reason why there's no answer to your question is there aren't any yet. Right. We're at the beginning.
Right. Yeah.
Yeah, being from the operator side more so, it's really hard, right? It's like really a hard task to do, but it's totally worth it. You know, we're pioneering a totally new industry, and who doesn't want to be a part of that? I know Wavemakers helped a lot of companies, you know, in terms of advising them in their capital raises, but, you know, some projects that I know that have gone through them, it can take a long, long time to get this done. It can happen really quickly, but it's worth, you know, gutting through, I guess. So, yeah.
So, oh, I'm sorry.
Yeah, I don't have much to add. I mean, I think the capital raises, depending on the region, actually changes a lot. So there's probably a lot more capital that's interested in these projects out in Asia, but that's a growing market for every business you can think of out in Asia. So I'm not sure if that is a fair statement. If you kind of adjust for just Asia kind of, growing and expanding at a very high rate, that any project, has a better chance of getting a raise in Asia than, let's call it, here. With that said, I think the U.S. economy overall is pretty healthy, so there is still healthy flow of capital, in this market, and probably a little less so out of Europe that I could see, and I think it really depends. Also, I think different projects appeal to different types of investor base, so that's something that I tell people to look at first before they kind of jump in and start structuring and figuring out laws and so forth. I mean, to start with, if you're just going to deal with offshore investors, you don't need to do all your work for Reg D, you just do Reg S, et cetera, et cetera. So it's really about who are you going to go raise the money from, what does that look like, and then you do your planning around that, and then you can do your structuring around making sure that the actual clients that are going to buy your product are going to be, happy with how you've set the deal up.
Right. I'm sorry.
And make sure that you actually have like a thought out product, because when you don't,
Yeah,
and it's more
that's
like
good.
some vague idea, you're asking for the class action complaint.
Yeah, right. Ben, I remember we were having a discussion not long ago, and you brought up a great point, and maybe you can speak to it. You said, hey, the issue right now is not issuers. There's a lack of buyers out there. So I thought that was an interesting point you made.
Yeah, so I think there's a big discussion about who's going to be buying security tokens. And my long-term belief is that institutional investors will come in and buy, the big banks, the big insurance companies with the balance sheets, and so on and so forth. Sovereign wealth funds around the world and so forth. I mean, they do invest in core assets around the world, and at some point they will accept that this is what they need and they will buy a lot of it. With that said, today none of them are ready because of two things. One is I don't think they've found a project that is interesting enough for them to invest heavily into. And second, they really don't feel like the infrastructure is ready for them. The exchanges, the custodians, and so forth. They want to be able to buy a token, hold it at a custodian, have somebody send them a monthly statement for them to hand that off to their accountant, and be happy that their money is where they think their money is. And that currently that infrastructure doesn't exist. So both of those things point to kind of a difficulty for big players to invest into right now. But I think that is going to come at some point, and it's just a matter of, for us to get there.
All right. Man, that's great. So are you seeing, I guess right now only accredited investors are able to invest in STOs, right? I mean, are you seeing that? And, I heard sometimes someone told me, hey, accredited investors tend to skew a little bit older, and they're like, what's a security token, right? So I don't know, I'm just curious, are you guys seeing that, or selling security STOs right to accredited investors, right?
Yeah, this goes back to what path you want to choose, which Morvareed spoke. You can do a Reg CF and you can get unaccredited investors, so up to $1,070,000 or $1,080,000, 170. But yeah, Reg D is accredited investors, so it's not democratized as well as utility tokens, and this is why I have gone from 100% STOs towards, believing in utility tokens, because we need to get to a point where people can invest, anybody can invest into quality projects. With that same thing said, there isn't a lot of quality projects, so I'm fine with it at how it exists right now, where Reg D accredited investors are the only ones that are able to invest, because they're the ones that can lose money in what's going to be a crap storm of companies that are going to fail. Because there's just so many companies that are going to fail, and I personally don't want people from the Midwest, where I'm from, investing.
So how many peas and crap?
Yeah, a lot of crap.
I really agree with that statement. At the end of the day, I think investing in kind of angel investing and kind of startup ventures, the success rate really is, we're talking 10% plus minus, depending on what industry you're in and how lucky you are. So, for what it's worth, I'm not necessarily sure that every single person out there should be able to just randomly buy all these projects, because I don't think, that's a good investment product for most of what people do. I mean, I wouldn't even have an accredited investor put the bulk of their money in this stuff, right? So, I mean, that's something that I get the whole, everybody should be able to participate, but I'm not sure if that's a fair way of looking at it.
Yeah, I think we can have some adjustments potentially to the standard for what a credit investor is. Maybe there's a way to get more people involved by just limiting it to maybe you can do 10% of your income at most that you can invest in these kind of projects. Because of the high failure rate, we don't want people to invest and then be going bankrupt because they don't know how to make those decisions appropriately.
So, Lou, this next question is for you. So, hey, if I'm an investor, where can I invest in STOs, right? I mean, is there like a coin market cap somewhere? I mean, how do I invest in STOs, and what type of return am I anticipating? I mean, last year I got like, I don't know, like 5x on my on my return.
Yeah, look, I think it's still incredible early. I think some of the leading platforms today, I mentioned earlier Republic, I think here in LA, I think Start Engine, I think what Howard is building there, I think is great. And I think he's laying a lot of the rails that need to get laid. It's still early days for this to be kind of functional from an end-to-end standpoint.
Right.
And but we're all working together to make it happen.
Right. So, okay.
Can't they invest in your fund?
Yeah. Can we invest in your fund? Is that what we're doing tonight?
Look, it's interesting. Look, we as a fund wanted to be a security token. And after many months and many dollars, not only could we not get our lawyers and accountants to actually agree on a structure that was tax efficient, and if you're not tax efficient, then you're not a thing. But even if we had, we actually couldn't really trade in a compliant fashion. And in my view, if you're a security token and you're not trading, then you're not a security token. That's what security tokens do. So, and that's fine. And look, it's still early days. We just have to appreciate where we are and work, I think, as a community to help solve the problems. Right. And they're imminently solvable. And every day, I think we're getting closer.
Yeah, that's right. Yeah, you didn't ask. So, what's the return I can make on if I invest in the STO? Is it 1,000x?
Look, I mean, I think the great thing is you should get an appropriate risk return for whatever asset class that it is you're investing in. Now, you should be able to have access to all kinds of things that you could never have access to before, right? And people who are able to, have a project and get a community around them wanting to invest and believe, now they're able to get that funded.
So, Paul, I know you do a lot of traveling, and you have clients, international clients. And you were just at Consensus Singapore, right? Is that?
Well, I think everybody. That's one of the questions earlier. Is like, what can you be prepared for as an entrepreneur? Travel nonstop. I know Lou's not based here. He's here all the time. I know Ben's whole team was in Singapore, then Hong Kong, and then Seoul, even.
China, and I think they're heading to Dubai, but
I
lose track after all. I didn't go.
So what's the internationally? Give us a feel for, is there excitement for STOs, or what's going on in Asia and other markets, international markets?
Yeah, I know. Again, Ben's team was just nice enough to invite one of the projects I work with to a kind of a symposium over there. That was all Asian investors. Asian investors, totally different. When Slice was trying to raise money for their STOs 6 months ago, crickets, just complete crickets. Kind of like maybe some people are having crickets in their head right now. When I was there just last week, Singapore, last week, totally changed, right? Because a lot of Asian investors got bit by a lot of projects that raised a lot of money, and then they ended up on a beach somewhere in the Caribbean or in a non-extradition place like Brazil. And so they've started to gravitate towards security tokens, but they don't understand it. Asian investors, from my lots of conversations, don't understand the STO market yet. So that's just my feedback from Asia. No experience in Europe, really.
No, sir. So in the next, I don't know, 6 months to a year, what can we expect in this space, or developments, or what do you think we'll see?
I think we'll see more compliant STOs being done on the front end. I think we'll see more legal action. These cases are now coming up for motions, and we're getting opinions now. I mean, these opinions I talked about all came out in August. So there's going to be more and more of these. There's going to be more class actions filed. There's going to be more criminal actions filed. And we're going to get clearer law about jurisdictional liability. It's developing, that you can't find loopholes anymore to avoid securities laws. It may still apply to you. And we're going to get issues about developer and node operator liability developing as well. So this is all going to be in the courts.
Right.
On a more positive note, I feel like a lot of the infrastructure that I said wasn't there will start coming into place. There's a lot of work on the ATS, the exchange side, for regulated exchanges to be able to trade tokens.
Liquidity.
The likes of T0, Templum, and many others. They're all working on it. That seems to be their thing. And the other area that is going to be exciting is really on the custodian side. I think there's a lot of concern with regards to custodian. Until the custodian side issue gets solved, none of the big players will come in. I mean, if you can't keep your money at a custodian, the other option is to kind of keep it in your own drawer, and I don't think any institutional investor is going to keep the money in their own drawer. That just is not happening. So I think BitGo was the first regulated. They just got their license, or they're now regulated as a custodian. I think a few other people will come online with that. And I've heard a few of the custodians are now also getting insurance, which is very interesting. I heard Kingdom Trust is getting insurance from Lloyd's Marketplace, which is not necessarily Lloyd's, so I don't know what that means. So anyway, but they kind of have insurance on some of the things that they do through Lloyd's Marketplace. I don't know who's offering that. Anyway.
Yeah, and a good point. Custodian, for those of you guys who don't know what custodian means, if you think of your stock that you own in Apple, when you buy that stock, you never actually own that stock. It's held in a custody facility somewhere, right? So there literally is like facilities that own that. In blockchain, we don't have that yet. There's some that are working on it. But going back to the question, I think mergers and acquisitions are going to start to happen a lot. What Ben just said, BitGo acquired Kingdom Trust back in February, like February 20th of this year, they announced it. And that's led to a ton of positive development in custodian laws, or in custodian issues, and a number of other transactional things. So mergers and acquisitions, it sounds like the devil. Like everybody's like, oh, mergers and acquisitions led to 2008, 2009. It's needed in this industry in particular. It weeds out the crap and brings in the good. So,
how about you, Lou? What do you think? New developments coming?
No, I think this whole idea. I think one of the really super cool things about projects is their ability to fork. Right, so if you want to be a part of a community, you're going down, and then the community evolves to something that you don't like. You can fork it and you can move on, and what's left is people who all are rowing in the same direction. And what I think will happen is some of the people, hey, we forked, but you know what? Actually, we shouldn't have forked. Look, they're in a better place. I want to go back, and now there will be a fork of the fork, and there'll be a spoon, right?
So it'll be like Bitcoin Cash or ETC or.
But I think it's about communities, and I don't think it's binary, right? I think it's evolutionary.
So at this point in our evening, we're going to open up the floor to questions. So I'll just pass my mic around, and please stand up, introduce yourself, and where you're from.
Ken Wilkinson, Best Rat Investments. Going back to the custodian question, all the research we've done looks like it's more cost effective and more compliant. We were a security before blockchain came around. We're still a security. Makes more sense to custodian traditionally, non-decentralized, so centralized, which I know goes against number 2. However, it's less expensive, it's efficient, and it's compliant. At what point do you expect that the decentralized blockchain will catch up to where I can then pay my dividends via blockchain, that I can do it decentralized as opposed to using a custodian, an escrow service, that type of thing? I'm picking you, and I'm picking at the end, because I think with the mic. I'm sorry. Yeah.
So to bring back the question is kind of, there's two thoughts of blockchain. There's decentralized, which means it's a global ownership basically, and then there's centralized. Centralized is kind of how the world has existed so far. Blockchain has brought in this new concept of decentralization. One of the issues with decentralization is to get development to happen, like serious tech development, you need to get a whole bunch of people to buy in and execute on that decision at the same time. And so the question was, when is that going to happen specifically around holding security tokens? Man, that's a good question. We need some centralization, some tokens that are centralized to start pushing the boundaries first. And those tokens are, in my opinion, 6 to 18 months away from even being able to push those boundaries, right? Q2, Q3, Q4?
Yeah, I don't have a lot to add to that. I think it really comes down to whether we can all figure out security in a decentralized fashion, and that sounds easy for me to say, but it's extremely difficult to actually implement. Short of having that, then centralized is a more secure way of doing it for now, and the big players actually, the big investors, the institutional investors I'm thinking about, don't really care about decentralization for a holding their investment perspective. I mean, they might like the underlying idea being decentralized, but for their holding of those investments and those ideas, they're happy to have it centralized. They don't care. They'll get a statement at the end of the month. They hand it to their accountants. Nobody gets fired. It's all good. And that's how they think about it.
I'd also like to point out most of these blockchains are not truly decentralized. They all have central actors and central entities, and that's why they work.
Hi, so my question is, as far as we can tell, the Kingdom Trust insurance is not true disaster recovery insurance. It's cyber insurance, which basically just pays them for replacement of the servers, which is not what you're interested in if you're one of their customers. You want your actual assets back. And to me, that's the real hurdle for custodian, because you're not really a custodian unless you have full insurance, recovery insurance, not server replacement insurance. And that is what we haven't seen anywhere yet. Even when people claim it, you read the small print and it's not real total recovery insurance. So my question is, when do you think that there's anybody actually thinking of that, and with a pricing that's not 10% of the assets being held?
I think, just kind of, there are different angles to this discussion, right? One angle is, what's the cost of that insurance? And there's not enough historical information, and servers are too easily hackable right now for people to provide insurance for less. The Japan exchange recently got hacked. They were a registered exchange too. I guess registration doesn't help security. It just means they're registered. So that happens. The other part, I want to make sure I don't lose my train of thought here. The other part of it really comes down to we can go down the path of the FDIC and the SIPC discussion, where we can have a centralized guarantee, across the exchanges, but then we're using the word centralized, and all the decentralized people may not be happy about that, and so forth, right? So it kind of loops itself back to kind of that type of issue. So.
But like you guys said, for custody, decentralization is not really.
It's
Only if I'm the individual and I want to own my own stuff. But for an institution, these guys are not going to set up their own wallet structure and all that stuff. They want somebody to do that for them, like you said. It's not
Yeah.
change.
Yeah, I'm going to say we should maybe take this offline because the concept of insurance in blockchain hasn't even like really started to develop. So super esoteric. Great question though.
Sorry, gentleman in the back.
Sorry,
Go ahead.
Steve Mead. I was actually going to answer custodial a different way. We've got 3 banks coming online in Malta that are following the blockchain law regulations that just got announced. So they're going to come online with cold storage custodial, internal conversion to fiat, lines of credit against targeted asset deposits. So it's a centralized thing, but the problem for us has always been the banking aspect, the custodial side. So we focused and helped Malta get stuff in the banking side where we can at least move our deposits in, not carry around thumb drives, that we're worried about. So the custodial side for a lot of the ICOs was a different issue on banking. And I know those are starting to come online. It's just a different way to think about it.
Sure, I guess I'm not sure if having it in Malta solves any of the security issues, and the fact that they're registered, once again, I'm not sure if it solves any of the issues. I mean, are Malta banks, are your deposits guaranteed there from hacks? I mean,
yeah, actually what's going to be announced are partnerships with Binance and OKX and all of the big exchanges. So they're building in off-net cold storage security, things like that. Again, I don't want to go too deep in. It's just there's different approaches that are being attacked at this.
Yeah.
And some of them are international because the domestic guys just can't wrap their head around things yet. And the last point, Kelvin, I think you made is they couldn't figure out the pricing mechanism. And I think it's going to be 1/4 to 1/2 basis point just as a managerial custodial fee on deposits. That was the only way they could make money because you can't loan crypto out like fiat.
Well, so just for everybody that hasn't heard about Gibraltar and Malta and Singapore and BVI and everything, there's a huge push by blockchain to go decentralized and to get away from the United States. We've got Lou here pushing it. We love that.
Hey, I'm an American. God bless America.
God bless America. One of the issues that we found doing this as a company is that we won't go to Malta or Gibraltar or some other place because the banking relationships don't exist there. So everybody remembers 2008 happened. People wanted to go to the banks and get their money out, right? When things were going, down the crapper again. You wanted your money out, right? In Malta and Gibraltar, the banks there, if you're a company, you have a really hard time getting your money out back to the US or back to whatever jurisdiction because the banking relationships don't exist yet. And then liability speaking wise, if your investors are coming to you saying, give me my money back, and you can't get that money back from Malta, that's a whole nother liability issue that the companies I've worked with have avoided those places for. So, yeah.
Hi. So my question is, we touched on utility tokens at the beginning. I just kind of like to get the view of the panel on whether you think that as a concept they simply don't exist or don't have any place within the ecosystem, or whether you just think you haven't seen a utility token that is an actual utility token.
I'll take a quick stab at it. I take my kids to Dave & Buster's or the common example of Chuck E. Cheese, and I buy tokens. I don't expect to make money on those tokens. They always disappear because of my kids. But I think fundamentally when you get into token issuance where people are putting their money in for investments and they do want to trade it so they can capture their gains in investments, it's a very tough discussion to say, look, these are not security tokens, they're just for utility. With that said, I'm sure there are people that can create pure utility tokens, just like Chuck E. Cheese and Dave & Buster's. They've done it. But I'm not sure if that's what people want to buy. So there's almost no overlap there in between those two ecosystems.
Yeah, Bitcoin's the only utility out there so far, according to the SEC, and nothing else I've seen even approaches that. Basically, you're taking the chances if you try to still structure it as a utility, because it's not. Yeah, it's tough, and the SEC is going to come after you because they're saying it's an investment contract at this point.
Yeah, real quick, I think great opportunity in the entertainment industry. I do not come from an entertainment background, but I'm learning a lot about it right now. Rewards points, like, travel points, things of that nature is a really good example of a utility that could happen. Haven't seen any projects yet, but.
Yeah, exactly. I was just going to say the exact same thing. Look, what all cryptocurrency is frequent flyer miles. It's now digitized and tradable. And, a mile is worth $1 or $5. It's not worth $10,000. I don't know why people are paying $10,000 for a frequent flyer mile, but people want to do it personally. God bless them. They should be allowed to do them, is my view. But at the end of the day, I think that this idea of rewarding people for being a part of a community and adding to a community, I think, is so underappreciated. And it doesn't have to be money. Like, money's awesome, money's great, we all love money, but what is so much more powerful than money for communities is status in a community. If you believe in something, the community is doing something and making the world a better place in a way that you want to be a part of, then you want to have status in that community, and that's free to give away. And I think we're just at the very beginning of understanding what these utility tokens can actually be. And I think the idea of conflating them with securities, is ridiculous. But, I understand why it happened because of all the craziness of what people were paying. But I think at the end of the day, they're a thing, and I think they're going to be a very powerful technology.
Yeah, I think it's developing. For example, there's digital currencies that already pre-existed. These, the cryptocurrencies kind of taking off. I mean, Facebook had a digital currency. Amazon has a coin. So in that kind of context, it works because it's being solely on that platform. But right now, we don't really see that same kind of thing with these cryptocurrencies. And so it's just something that kind of needs to develop and see how it'll pan out. And that'll involve litigation.
Does anyone have any thoughts about stable coins, and do we need as many stable coins that are coming out? And what are your thoughts?
So, it's an interesting concept, and I think cryptocurrencies in general are an interesting concept, but not necessarily the best use case for blockchain technology, because I see it at any point the government can come in, and there's already governments who have done this, like Russia's working on a crypto ruble, Venezuela has the Petra, Estonia is working on this. Nothing is stopping from the government to try to maintain control by putting out a US coin and then incentivizing its use by saying it's FDIC assured, or you get a tax incentive for its use. That gets all of us who are into cryptocurrency on board, as well as the people who don't understand cryptocurrency and blockchain because it's government backed and there's legitimacy there. So I think that kind of state-issued coin is what's going to actually succeed in the long run and be how the governments maintain control in these decentralized systems.
You had me until, and there's legitimacy there.
In the eyes of people who don't understand
they're printing
blockchain.
up an unending stream of dollars that they never intend to pay back. They're not paying it back. So I don't. So yeah, look, right. What the question is? I mean, in my view, right, stable coins, right. What you need a way to come in and out, right, of wherever you're coming and going to, right. And I think that's at the moment what I think a stable coin can do, and when somebody figures that out, that's a huge thing, right? I mean, Tether, look at what Tether does, right? I mean, how can anybody doubt that it's a huge thing?
Are you seeing projects where, hearing you think about the two projects where you have security and you have a utility coin that's a stable coin within the project? Thoughts?
I think that's an interesting thing because you're getting in that issue where you're kind of starting to test the area where the SEC has said you can't really do this. So fine, go ahead and try to do that, but be aware that you're likely facing some legal issues down the road, and you're going to have to incur the cost of addressing that on the legal side. Like, it's great, you're innovative, you're on the front run, but you're also being on that kind of front runner, you're also incurring the cost of being a front runner.
I actually think that's an interesting discussion, right? That goes back to kind of my example of the kind of the Dave and Buster and Chuck E. Cheese coins, right? I mean, people are not buying Tether because it's going up, because it's not going up. So, for what it's worth, this is not really used as investment. It's for convenience of transfer. One of the uses that I've seen for stablecoin, which actually is really convenient for things that I've looked at, is I keep talking about dividends because I've come from the buy side, but when you're paying dividends, if you have to pay cash, you can need everybody's bank account information. You do a wire, you need to pay for the wire, or you just send them some tether, you're done, right? And it's a dollar amount that they're supposed to get, but it's in electronic form. And Tether, there are arguments over whether it's good or not, whether it's audited or not, and so forth. And then Gemini came out with an audited one. Circle just came out with an audit, or they're about to come out with an audited one. So that's better. And the next version that's going to be quote unquote better than that is the U.S. government sending one saying how my dollar is better than your dollar, and everybody else loses. But until that point, I guess Gemini and Tether, Gemini and Circle will be in the lead because they're audited versus Tether, where they don't really want to release their audits. I don't know if they're audited or not. I'm not affiliated with them. So
Look, like the promise, right? I mean, you look down. You don't have to look too far down. The promise is you don't need any of this, right? Why do you need a guy in the middle? All these are again, they're trying to insert themselves in the middle as a means of exchange. Take them the fuck out of the middle and just have a means of exchange. Seriously, everybody should be able to exchange with everybody at a rate, right? I mean, theoretically, that's where it goes. Whether that ever happens, I don't know. In the interim, then there's probably is some means of exchange like a Tether or a, some other stable thing.
Two more questions, and then we're gonna wrap.
Hi, thanks. What do you guys think of the airdrop model? If you're distributing tokens for free to token holder to different wallets, and those tokens end up on exchange, getting traded on exchange, but nobody ever actually paid for them, is that a way of circumventing securities? I mean, legitimately, because nobody paid for them.
No, the SEC actually came out really saying the opposite, saying it's a security. Like just because you're giving people free for their services, no. So, not a good idea.
Yeah.
What if their model is based on the Chuck E. Cheese, where people have to use those tokens to nobody's making representations that they're going to increase in value, but you need those tokens to enter the platform or to use the platform, and that's it.
You get to be the test case again.
So that would still be a potential utility use case, though, right?
Yeah. So really quickly, what Morvareed just said is what the SEC came out and said. It's a security. Why would you ever give away equity of your company for free? You wouldn't. Nobody wants to give away what they own for free. The instance in Chuck E. Cheese, which actually is appealing, is if there is a system that's working, it's fully operational, and you can give somebody access to that in a creative way. But yeah, you want to create adoption, you want to get buy-in, you want to just expand your user base. That's the really interesting thing. Again, it goes back to a lot of the discussion we've had. Have we seen any projects that have had a fully functioning ecosystem that they're just going to give something away for free to get more buy-in? I don't think we've seen it yet. Yeah.
Hi, so I've heard a lot about security tokens replacing utility tokens, and I think Lou was talking about kind of the network effects and the community effects, and I guess I hear a lot of interchange between ICO and utility tokens, and I think when we're talking about securities, it's really using these things to raise money, which I agree 100% that these are going to be the ICOs concept of using utility tokens to raise money will be replaced by STO. But when it comes to the network effects and the example with airline miles, et cetera, I think there's a place for each. And I just wanted to hear, absent the ICO idea, so take the ICO out of the equation, I have an existing product or service, and I want to distribute that for network effects, incentives, et cetera, why would you believe that that would be any failure of the Howey test or be deemed a security if it's not it's not a centralized company, there's no funds being received from an ICO to fund that development, but rather it's being used for the other purposes discussed?
If there's an expectation of profit, that's kind of the basis of the Howey test. So it would all go into the devils of the details. For me, what makes it a security and what doesn't make it a security. People in this room, you're going to invest into a cryptocurrency or participate in general because you're going to want to make money, right? And even if it's decentralized, there's still primary people in that organization that you can go after. They can just shut down the company. I don't want to see that happen with a lot of these because they're interesting projects, but that's how it's being viewed, in my opinion. Even decentralization, as Morvareed said, doesn't mean something's decentralized, I guess. So.
I mean, that's the case. I mean, how many truly decentralized blockchains are you aware of? They all have central actors, and that's the way it works.
It would really be fun to do a panel. Just passes or don't passes.
Pass.
Last question.
Hi. Harkening back to the airdrop question. So the Brave browser, which is a blockchain browser, so they offer, I don't know, I forgot what their token's called, but they offer like free BAT. So it was like $3.20 worth of BAT every month to then allocate as you like to websites or advertisers that you want to support. So they're basically airdropping to me every month a certain amount that I can then just spend as I see fit to thousands of different websites or advertisers. How does that fit into this discussion that we're having that this is possibly going to end up in litigation?
So I'm a fan of what BAT tried to do, the BAT token, because it's a really cool idea, right? It's a new decentralized browser that you can get buy-in. At the end of the day, though, they got listed on a bunch of exchanges, so people are buying that token. Unlike you're the first person I've ever met that's actually using it for web browsing stuff. Like, awesome, good for you. Everybody else is going on their exchanges, and they're like, hey, I need to make money off of this BAT token.
Reading the article.
Yeah, exactly. They just want to make money. So that's where the fundamental difference comes in. If they would have never allowed the BAT token to exist on an exchange, if they would have coded it differently, I think that would have solved a lot of problems that they're potentially going to have.
What do you see? What's happening with it? What do you see is going to be their issue? How soon?
Morvareed.
Whenever an investor is angry. That's it. That's all it takes to get a class action. One person. Yeah. I think the other thing to kind of just think about, all these, even the cryptocurrencies that are meant to be digital currencies are all securities basically at this point, except for Bitcoin and Ether now. So think about it. That's what the SEC has said. All these other ones are still securities.
Well, that concludes our very insightful. So thank you for coming out. And let's thank our sponsors, Spaces Co-working. If you're interested, if you're here in Santa Monica, please sign up.